than Tata Consumer, the top nifty loser right now. Confounding, because the results were fairly resilient. In fact, there was margin expansion, as the management had earlier pointed out as well. Maybe there is something that the street is nitpicking, perhaps the international coffee prices and maybe the outlook out there, the demand, etc. So who better than the Managing Director and CEO Tata Consumer Products, Sunil D'Souza, joining us here on the numbers as well. Sunil, thank you so much for joining in. And that exactly is the first question, because we'll obviously speak about demand, business, and how margins are likely to pan out. But is there something that the street has missed this time? Because, or are they worried about something? A big gash on a nifty stock after what is a resilient performance is quite unusual. Have you done any fact finding here?
So Mangalam, thanks for having me. Our job as management is to deliver numbers, and it's for the street to decide what the share price should be, right? And I do think we've delivered a decent set of numbers. We've crossed the 5,000 crore mark for the first time in a quarter. 5,112 for the quarter, up 15%. EBITDA was up 26. Group net profit was up 36. So financial numbers look good. It was a volume driven top line. Tea up 3, salt up 14, Sampan up 45, ready to drink up 26. Growth businesses grew 29%, contributing to 30% of our business, in line with what we had guided for. International grew strongly, a bit soft on the bottom line, driven by US coffee prices. But you know what? We've taken our latest price increase in January. That covers for most of the coffee pricing. And therefore, from here, EBITDA margin should look better. Strategically, I think we're in a good place. Innovation up to 4.8 against our target of 5. Quick-com grew 100% for us.
Right.
E-com plus Quick-com is 18%. So all in all, a good set of numbers. I wouldn't comment on the share prices per se.
All right. Okay, so let's try and figure out what the street could perhaps be a little worried about. And if you can address those concerns as well. One, on margins for the international business came down from about 14% to about 12%. You had earlier said that the exit quarter consolidated margins would be upwards of 15%. Are you on track for that? Secondly, Capital Foods and Organic India still haven't hit the 500 crore per quarter sort of run rate. It's still about 350, 354 crores. Do you think, that is likely in the fourth quarter?
Yeah, so Mangalam, we've guided for exit to close to 15% EBITDA margin, and we remain on track for that. 14.2 this quarter, which is up 60 bips versus last quarter, and 120 bips versus last year. Actually, if I add the negative of the US coffee alone, I'm at a 15% already this quarter. So having taken the price increases in the US, we remain confident of getting close to that number by the end of this quarter. That's number one. Number two, for Organic India and Capital Foods, overall margins remain very strong, 48% or thereabouts. Capital Foods domestic has improved sequentially month on month. The little bit of pressure was because 20% of the business comes from exports, and the US tariffs have impacted us a bit because retailers have downstock. But that said, we've taken the price increases, remain confident of driving it. Organic India grew 26% this quarter, so there's no reason to worry. On top of that, actually speaking, we've made rapid changes in our go-to-market systems in India to make sure we provide additional focus. Just to put it in perspective, when we started off, we had separate sales people by category with common distributors. But over a period of time, we've realized we needed to separate distributors as well. So right now, we've gone with 3 different models, where salt was overwhelming. It's a salt separate distributor. Everything else is a separate distributor. Where tea and salt was overwhelming. For example, in Calcutta, 91% of the business came from tea and salt. Only 9% was growth. We created a separate growth distributor. And in other geographies, we've created a separate salesperson who goes to smaller outlets, and a focused high caliber salesman who goes to the larger outlets. So with that and portfolio expansion and continuing to put A&P, we remain confident of driving these numbers up.
Mr. D'Souza, this distribution efficiency drive that you've undertaken, if you could give us a little more clarity, I mean, all these changes that you're talking about, where will the gains start to show up first, and how quickly will they start to show up, whether that is, faster revenue growth, margin improvement, where do you first expect to see these gains?
So these gains will primarily come in the top line, and they will come simply because of focus. When we became a multi-category business, so to speak, right? Just from a tea and a salt, we went into Sampan, we went into ready to drink, we went to Capital Foods, Organic India, Soulful. To give focus at the front end, we started to have separate salesmen. Just to make it simple, it's a tea and coffee, salt and Sampan, and Capital Foods and Soulful. But what we've seen is where, like I gave you the Calcutta example, where tea and salt is overwhelming, the focus of all the salesmen, the supervisory force, everyone is to make their numbers. It's easy to do the bigger categories, right? So therefore, we've separated it out right from salesman to distributor to supervisory, both the territory sales executive and area manager. So there is separate focus. We think we'll get distribution expansion and we will get SKU expansion in the stores that we're present to drive top line. The pilots that we ran for about 3 months bear this. In some of the cities, we got nearly a 60% uplift in SKUs. In most cities, we got a 20 to 25% increase in top line. So we remain confident of driving top line. The margins are in a pretty comfortable place.
You know, Mr. D'Souza, the two numbers that stood out for me in the quarter, as I look at the numbers, one was the growth in Sampan, as you highlighted, and the other one being the growth in Nourishco. Both of them were comfortably above what the street was anticipating, but at 45% and at 26% for Sampan and for Nourishco, do you believe this is a sustainable rate of growth? And if not, what is a normal sustainable rate of growth that you are envisaging for both of these businesses?
So both these businesses form part of our growth portfolio, and we've always guided for a 30% growth. And I wouldn't change the number there. Yes, we do try to hit sixes instead of fours from time to time. And I think this quarter we've done that. Ready to drink is broadly in line with the 30% guidance. It's 27 volume actually. And we're in a good spot. We very, very clearly decided to focus on 3 pillars: a full stack of water, right from Tata Copper up to Himalayan, and with a lot of value-added waters, you'll see a lot of launches coming in. Clear portfolio on affordable hydration with the cups portfolio, and tea, coffee. We've got kombucha, ready to drink, coffee. Now we've launched a 50 rupees coffee, etc. On Sampan, I think there are 2 categories which have really driven the numbers. The growth has been broad-based, including our core of pulses, poha, makhana, all that. But also our new launches of cold press oils and dry fruits. I think they have been exceptional. Dry fruits, actually, I'm close to a 300 crore annual run rate now. Similarly with cold press oils. And these are products launched in the last 18 months. This whole hypothesis of entering categories which are low trust, providing high quality products with a Tata brand name, differentiated, I think has worked to our advantage.
All right, just a quick one before we let you go. Sunil, 20,000 crore this year is a foregone conclusion with 15% exit margins, almost 1,000 crores on Nourishco as well. Next year, the revenue, margin and Nourishco growth target. 3 words.
So, Mangalam, nothing changes. Double-digit top-line growth, EBITDA margin expansion. We will exit close to a 15% this year. In the medium term, we're targeting to be around 17 in the next 2 to 3 years. So directionally, it will move in that. And Nourishco, 30% growth, I think is a given.
Take that point. Thank you so much for joining in. And like you said, it's the street's job to value the business. Yours is to deliver the numbers. Wish you good luck for the 4th quarter. Take a short break, come back. We get joined by the management of IGI to discuss their results as well. Let's talk buzzing. After a very good performance, Ishwar Iyer, who's the CFO, joins us in our studio.